How are you looking at the landscape going forward for UiPath, given the focus is now on AI and AI integration?
Yeah, so first of all, we had a great Q3 earnings. Very proud of our employees and our partners and how we came through for our customers in the third quarter. Continue to expand the business where we said we would expand in the upper segment of the market. We started that trajectory quite a few quarters ago. We feel like it's paying big dividends. When you look at the market, I'd quite honestly say the market feels the same as it has been for the last 6 quarters, if you will. And we've just got really good at executing in this market, and we feel like, in order to run an automation business, this is a good market for us, and that's coming through. Companies are really struggling.
Do you think that's unusual from the previous cycles where higher rates would impact client budgets, would impact software budgets overall, that this environment is different?
I think this environment's different, slightly different for a number of reasons. When you look at growth and growth opportunities, many industries are struggling to find growth, and therefore they focus on efficiencies and driving out efficiency. That fits us really well. Our automation software powered by AI really helps drive efficiencies. And labor constraints, helps to deal with labor constraints in a significant way. So for us, we feel like we are well positioned in this environment, well positioned if we get some tailwinds coming in the future to take advantage of that as well.
What would be those tailwinds?
Inflation coming down, less variability in the macro environment, more stable world would help as well.
I would have to imagine the things that you mentioned are also tailwinds. The fact that there are labour constraints, you've got a number of businesses now looking to take advantage of this big infrastructure commitments, not only in the United States, but also globally, in Europe and everywhere else. And, in terms of where you're seeing the most growth, because even just off the top of my head, because you signed a lot of new over $1 million contracts in the last quarter, are you seeing it in Asia? Are you seeing it in the US? Are you seeing it in Europe? Where has been the most take-up?
Great question. Well, look, we signed we've got 264 customers that spend more than $1 million ARR with us a year, 1,974 companies above 100,000, and it's growing. The growth has been in industries like public sector, financial services, healthcare, insurance. They've been driving a lot of that growth for us globally. We're seeing that in the US, then in EMEA, and we feel like it's coming on now in Asia Pacific in a big way as well in the next couple of quarters.